Good evening. Good evening. How are you doing?
Good evening. I'm doing good, mentor. And how are you doing?
Very well, thanks. It's 7th of October 2024.
Blue Monday.
All good. Yeah, it's a Monday. Yeah. Yeah, it's been one of those busy Monday. And how it's going
Yeah,
on your
at
side?
least
Are
on this
you
Monday, I'm feeling
hmm?
yeah.
Hello?
I would say I'm okay. Learning. I'm just learning for now. I haven't made any profits except to understand in terms of being practical, using meta trade. Oh my God. Oh God. I don't know whether I'm on the right track, but all I can say I'm learning.
All right.
Yeah.
Okay. So that is very important because, a lot of people, they come to trading, we know trading, yes, you can make, it's one of the highest paying profession in terms of income. But you also remember there are a lot of there's a lot,
Really?
yeah, in the US, traders they're making over $1 billion on bonuses a year. So traders they make,
Yeah.
yeah, a lot of times you see a lot of
Oh my
times when you see
goodness.
the movie stars, the what you call this, the movie stars, the celebrities, whether in sports, even the
Yeah,
presidents,
yeah,
most of them they
yeah.
travel with private jets or they even shoot
Uh-huh.
music for movies that are owned by traders.
Yeah, so
Yeah. So trading is one of the highest paid
oh my
in the world. One of.
God.
Yeah.
So
But the thing
so
is,
if you are saying that mentor,
hmm,
there
what?
the thing is
No, you're saying if I'm saying that I couldn't hear the
you
last.
were you were saying, but you just cut, you just like two of us were just making.
Okay. So I was saying,
Oh,
because
what I was saying,
hmm,
that private jet that I had in my vision
hmm,
board. Okay. Right, it's fine. Let us proceed. Let us proceed. Yeah, let us proceed.
yeah.
Yeah.
All right. Okay, so tonight we're gonna make the session very simple. Okay, remember last week, I think last, but tonight we're gonna be combining the two, the weekly analysis, because this week we have couple. Last week Friday we had NFP on a Friday. So if you're not sure, NFP is a non-farm payroll. That's what the name is. NFP, non-farm payrolls. So these are the employment numbers that are released on the first Friday of every month. So because these numbers are released on the first week, and also these are the first reports that are released every month, they do have a significant impact on the market. So that is why, if you go to your charts, so we're going to do this. So remember, we talk about time frame. So if you go to your charts, let's go to properties. And if you go here, show period separators, okay? So this, I go to M15. Remember, M15 is a time frame. So today is a 7th of October. So this is what has been happening today in terms of gold. Okay. So the opening price was here, and now currently gold is here. Not much movement. Okay. But on Friday, we saw gold doing this after the release of those numbers, the NFP numbers. We saw gold dropping. Okay. Because the numbers were positive for the dollar. And also, I think on Wednesday, we saw even the ADP numbers, the private sector numbers also show that there was a bit of addition, not a bit, a lot of, I think 145,000 new additional jobs. That's where 89 jobs that were added in the US. So that is a positive thing in terms of the dollar. Okay. So we saw gold, dropping heavy from this level, which was the high on the day, and it reached this low, okay, from uh 2668 up to 2632. That was the low on the Friday. Okay. So remember, if you are trading, you have to, it's for your best interest that you follow the fundamentals. What are the fundamentals? These are the economic news reports, okay, that are being released every day, every week. It's also inflation numbers. Inflation numbers is your CPI, it's your PPI, These are numbers that shows the inflation, which means the prices of goods and services. Remember, oil prices have been going up. Food prices are going up. So that is your inflation. So it's for the producers. It's also for the consumers. And also, in terms of fundamental, you also have unemployment numbers. You remember all the presidents or premier of every country, they want to see more people getting employed. So if unemployment numbers are dropping, if more jobs are created, it shows that the economy is growing of that country. Hence, you'll see more people using the currency of that country. If the economy is growing, the value of the currency are more likely to appreciate. Hence, more people are using that currency. Then you see a growth in retail sales, which is another economic indicator. And then another fundamental thing you need to look for is what we call political stability. Okay, political stability talks about the government that is ruling that country. So during election, you'll see a lot of movement. Remember, next month, which is November, we're gonna be having a USA election. USA, remember, is one of the world reserved currencies. You can see this is gold. Gold is priced in dollars. XAU USD. This is gold, but it's priced in US dollars. So whenever you see a lot of things happening in the US, it will definitely affect, gold or many currencies, for to say, okay? And then interest rate decision. This week, we're going to be having NZD, Bank of New Zealand, giving out their interest rate decision. Remember, interest rate decision is one of the key fundamental because interest rates affects the credits, people that are buying cars, properties on credits, the consumers, even businesses that are borrowing money to grow their business, even to manage their business. So NZD is one of the pair we're going to be watching this week. Remember, with of the USA, the Fed Reserve Bank of United States actually made a cut in terms of 50 basis point. New Zealand, remember, also last week we had the Bank of England, the Governor Bailey, Andrew Bailey, saying that there's going to be some a very aggressive, he said, very aggressive approach in terms of the cuts in the pound. And that's why we saw the pound. I think we saw the pound dropping aggressively, after drop on the pound. Even though obviously the drop, even technical wise, was right on point, but but also those comments by the governor made an impact in terms of the movement. Okay, so every week you can go to the investing.com or Forex Factory or any website where you can see all the economic reports, and also you can simply watch some news like your Bloomberg or any, like, for example, if you simply watch, if you want to follow the news, you can watch some news political wise, especially the war that is going on in Israel and Iran, because that also affects, in terms of stability. If there are wars going on or pandemic, you'll see that it will affect oil, and it will definitely affect the investors' approach in terms of investing. A lot of investors, what they do, if there's a war or there's some pandemic, what they do, they withdraw some of their money from from the market. So that's why you see a crash in terms of the indices. Some of the shares, obviously, price of the shares will drop, and you see a drop in terms of the Nasdaq, the JSE Top 40, UK 100. Why is that happening? Is because investors, when there is a war, they want to have cash available. So hence, what they will do, they will draw their money from the shares, and hence you'll see indices dropping. So this has been the trend in terms of oil. You can see oil has been going up from $70 since there was those attacks, and it seems like they're pretty hectic. But I think maybe this week you might have a bit of a resolution, and we'll see. I'm showing you the charts. That's why I'm speaking. I'm showing that this is oil, and let me just show you charts of what happens in terms of the. Let me just show you the Nasdaq, US Tech. Okay, so when there were some as you know, in terms of the war becoming worse, there was this drop in terms of the Nasdaq. Okay, but then we saw positive NFP numbers, and then we saw a recovery in terms of the Nasdaq and other indices. Because positive numbers, they do, influence investors to go back and have some belief that they're going to get some positives in terms of in their investment. Because if you're an investor, what you want to do, you want to invest when there's not much political unstable situation, when there are no wars. When there are some wars, you want to have cash so you can buy, resources. We saw a lot of people panicking during the pandemic and they were buying things. And they went to the mall, they were buying food. Like there's not going to be any food tomorrow, and like the shops are going to be closed, But that's what happens. During the war or pandemic, a lot of investors, they panic. That's why you see these indices, they drop. That's why you saw that drop on US SEC, okay? So in terms of for our beginners and also for advanced, we're gonna do a session, or this session basically is gonna be a weekly analysis and also a bit explaining more in terms of the usage of the MT4. The reason we use MT4 is because MT4 is very simple. We're gonna teach in terms of how to use the TradeView and other platform we use to analyze. But you can see a M1, M5. These are the smaller time frame now. USD CHF, this is the currency pair USD versus CHF. CHF is Swiss franc, okay? And you can see on Friday with the positive numbers on NFP, which is employment numbers, and you can see on the USD CHF. If you go, this is smaller time frame, a bit of a level. We call this level obviously the high, and the market has been dropping. If you take this is a crosshair. If you click on this one and you go there, you can see three numbers. The first 96 is the number of candles. From this level to this level, the number of candles is 96. And the slash 716 is the number of pips. So you divide that by 100. So this is 71.6 pips. Okay. Pips is like the distance, or should I say, and if you are traveling, we can call it kilometers. How much from there to this level, how much did the price travel? Is travel 7.18 pips. So, and then the last number is the price at that level. Okay, 96, number of candles, 718 is the number of points. But obviously, to get the number of pips, we divide it by hundreds, we get 71.8 pips. So, and then the last number is the cost, is the price at that level. Okay, and you can see if just at the opening price you just took a trade of a sell, okay, of a sell. If the market, as the market went to this level opening price, and if when it touched that level again, you just took a sell from there, from there to there. Let's check this cross set. You'll see it made over 65.3 pips. Okay, if you're trading with this lot size zero, okay, with this, okay, with one lot, 65 pips multiplied by 10 is going to be 650 US dollars. Okay, it's good money. And obviously, remember, you needed to sell to make a profit. If you bought, you made a loss. Let's go to the high time frame just to see how is this pair been moving. Okay, so we can all be. The reason we go to the higher time frame is because we want to see the direction. The reason we go to the smaller time frame is because we want to see our entry. So a higher time frame, that is where we put our take profit, and lower time frame, that is where we put our entry and the stop loss. Okay, we want to have a smaller stop loss, but we want to maximize on our take profit. Okay, as you can see, I mark this level as my low, and I mark this level as a point where the price actually broke below this level. Okay, the price was moving at this level, and if you look left, you can see this level here was low. Okay, when the price came to this level, it broke below. Let's just zoom in on that. You can see. So this level was our low. So the price touched this level, went up, came back to this level again above, came back to the same level, 1, 2, but then it went up and then it broke below that level. So it dropped below. So now we're looking at the price, and then this was FCR failing to return to that level. So we're expecting again the price to go further up and then drop. These are some of the expectation. So because this week we've got inflation numbers, CPI and PPI coming through this week, so I will expect number one, going to the higher time frame. I think we did analyze USD CHF last week. Okay, so my analysis on it, number one, let's go to the daily time frame. So I said expecting this market to do this. If you go and zoom in, so I expected to break above this level, okay, then come back here at this level. So this is another pattern, okay, and it did, and then drop again to this candle. I like this candle. This is where originally we saw a nice bullish movement. So from there, and then the market going further up and then dropping. Okay, let's just zoom out so that is clear. And yes, okay, let's go to the H4 to make it a bit more clear. All right, and also I even like this pattern here. So also even like that pattern. So expectation, this market, this obviously, as you can see, the USD CHF, there was a lot of even here, okay, this here, okay, Prince is joining us, okay, perfect, okay. So even these levels, the market has been touching these levels. So these levels, yeah. So touching a level, touching a level, touching a level, 1, 2, 3. Remember, some traders had their stop losses. They had their stop losses just at these levels, 1, 2, 3. So that's why the market is to push up to take those levels up. And you can see this pattern here. So if you go, but what I'm going to do is to show you a pattern. So my expectation on this is that the market will come back here and then go to this level and then make it drop. So expectation is that the dollar will obviously pull back. Before you buy, you must have a price dropping. And then once the price is dropped, then you can buy cheaper, which is at this level. Sorry about that. So which is at this level, buying it cheaper and going to that level. Remember, I said stop losses, stop losses. That's why the price has to move further up to take those liquidity. Remember, the market, what it does, it would move in the, for example, if the market has been moving in this direction, right? Before it can go up, it needs to drop. So traders will be selling, saying this market, the trend of this market is a bearish trend or it's on a downtrend. It reaches a point of manipulation, giving people, traders are making a stop hunt, meaning a stop hunt is when the market goes opposite the direction that it wants to go. And you can see here, it's been moving just up and down sideways for some time. And then there was this huge pull back to the upside. And then I'm expecting the market obviously tested this level and again retest it and then potentially to this level and then further drop. Okay, so that is expectation on USD CHF. Okay, let's go to another pair. Another pair that I've been watching obviously is the GDP USD. I think we did analyze it last week. GDP USD. If you go to the weekly time frame, let's just wait for it. So this is the weekly time frame. Delete that. Okay, if you go to the weekly time frame, remember higher time frame for direction. Okay, so if you mark that level, you can see that level is significant. So the price has dropped. Okay, so and the last candle that was bull bearish before the market actually moved up is this candle, and you can also see that there's also that candle right there. Okay, because if you draw a line there, you can see the market touches the level. So let's go to H4. Okay, if you go to H4, these are the levels that we marked on the high time frame. Okay, so the market made a drop. So this was a drop, and then it made another drop. So expecting another drop from there to there. That drop, then after that drop, what's going to happen? A reversal. Okay, a reversal to the upside. Okay, but before making that drop, the market is more likely to do this on GDP USD. Is more likely. Remember, you can see if we zoom in, you can see this candle. There's a reason. These candles. So I'm going to mark those candles. Let's remove that. Let's remove also that. So these candles. So when I mark those candles, my expectation on this, the market will upon these candles, it should form something like a W. Okay, and so this is now second leg, and then the market go further up. So from there, expecting that at this level, so you're more likely to see a drop in GBP/USD. Let's go to the daily just to show you this. So this is expectation. Let me just remove this. So, and if you look closer, this is a bullish engulfing. Okay, if you don't know what is bullish engulfing, you can quickly, once the session is done, go to the Google and just search on it, or you can go to YouTube and they'll tell you about bullish engulfing. Okay, so expectation is that the market at this level, they'll make a pullback and then another drop towards this level here. Okay, you're looking left, expecting the market to come here. You're looking left again, creating 1, 2 level of support, drop to the upside, move to the upside, and then a drop. So that is my expectation. Okay, so that is expectation of GBP/USD. And what we can do is also the off. Okay, so let's just do this. So that the price will come to that level, at this level. Okay, at this, and then drop towards that level. So that is where you should see an aggressive bull. You can note, okay, I'm going to show you which candle I'm talking about. This candle here. Okay, this candle. Okay, this candle here. A bullish hammer here. So the price went up, dropped towards this bullish hammer here. So expecting again the price will come back here. And I think another pair, let's look at, love us to look at. Please don't hesitate just to write it in the chat. See, if I want it, okay, I just drag it. Okay, I just drag it for them. Okay, and you can even see on this one. See, so this is a level that is critical. Again, and do this, test that previous level, and then further drop. And this is a level where more likely we should see a nice bullish momentum to the upside. So, okay, we'll check GBP/JPY. Okay, so here, since the reason I'm saying, if you're looking at AUD, you should expect that Euro AUD should be dropping and GBP. And okay, I think we're on your sticker. So I drag to daily first because is there another one? Oh, your state. Okay, perfect. Okay. Okay, perfect. So we go to the daily. Okay. What I do is I like to change this into a line chart. So I'll take it this level, which is high. Okay. So this is my highest point and this is my lowest point. Okay. So I'll take the vertical line, horizontal line, a trend line. So a trend line is this line that can move any side, any angle. Okay. My level. So I take a Fibonacci. Fibonacci is a tool that we use to dropping. All right. So now I'm expecting the Fibonacci or USD CAD to reverse around on it, just above it. There is something that happened there. You'll see a reversal around the 50 and the 60 between these two levels, between the 50 and the 60 of the Fibonacci. 50 means the price has reversed by 50% and expecting the further price to continue dropping. It means the price, let's say you are selling apples, your apples were cost to 5 rand, and because there was a growing demand in this area here, now after dropping by 5 rand by 50%, now the price is increased again by 2 rand 50 to that. Now 61.8 means just a reversals. Okay, so let's change this into candlesticks now, and you can see the candlesticks that are. So let's go to H4 just to see this Fibonacci. Let me just remove this Fib here. Okay. So I am expecting this to, obviously we posted it on Telegram that obviously it was nice. It was a very nice trade. We posted even you as this level, the price came back, and right now the price is here. At this level again, chances are gonna react, and when you can see spinning top candle. Okay, so a reaction here, make it drop, and then another push to the upside, and then a further drop. Okay, on that level. Okay, just delete this, delete that. Okay, so all right, let's do GBP/JPY. Okay, I think we've seen a steady drop in terms of JPY, the yen pair. So let's go on the daily. Okay, the daily, you can see the yen has been fairly strong for some time, and there was this sharp drop here. All right. So the first thing that I do when I do some analysis, I first take the Fibonacci. Okay, Fibonacci is one of the most critical tools. So since the price has been dropping, so you take the low take the from the high to the low. Okay, so I zoom out. You can see 61.8, the level above it. You can see these are the candles that were opposing the momentum. So these are the candles here. All right, and if you just draw it very nice, you can see even this level is nice. Okay, because that level, see that level, the market was moving. This was like a resistance level. The price broke and came back here, and it formed this railroad track. And after that, it just kept moving up, coming back to the same level, which is the same level as that. And then the price make a fake as if the price is going to continue going up by forming these bullish candles. Remember, these are daily candles because this is daily. And then the price just made a sharp drop. Okay. Then after that, the price came back to this level here and then dropped again, bullish here. And then the price, now I'm expecting the price will come back to this level here to make a drop. And that drop is going to be towards the 11. These are the levels that you want the price to come back to. Okay. So let's just do that. Let's go to H1, H4. Okay, let me just delete this. Okay, so these are my expectation on this one. All right, and you can see right now it's forming what I call it a compression. So a compression, you can see it's forming some sort of a compression. So, and even that level, if you check to the left, even that level, you know, it's a nice level for it to drop, but expecting it can drop towards that level. Okay, so you can see I've marked. So you can see this is between the 50 and the 60 in terms of the Fibonacci. And the price is testing. First test, first sign, and then the second time, third time. So if the price goes to there and drop, it can also just drop heavily, you know. But once the price has been forming a compression, I like the price to do like a sharp, you know, testing the highs, where the price just moves sharp up to the upside, forming big candles, then leave a pin right at that level, right on this side, and then just continue dropping. And then at these levels here, between the 69.9, 11, and 5, for the price to go further up at these levels. Okay, so and that is my expectation on GDP JPY. Okay, because if you see a compression, it means the market is simple, just building up orders. It's simple. You can see 1, 2, 3, building up people to buy, and then eventually it's gonna make a huge drop to the downside. Okay, let's go to US30. It's gonna be our last pair that we're gonna be analyzing tonight. Okay, you can see I'm dropping and dragging. I'm just taking a pair here and dropping here, all right? And then I change time frame this side. I click H4, it's gonna show me the 4-hour time frame. And okay, this is, and you can see, remember I said, okay, perfect. Thank you very much. You know, and like I said before, even the reason what is happening in terms of the indices because of these wars that are happening. So the wars are not good for indices, you know, political instability, and also the upcoming election are not really making things easy for this. But obviously this week, you can see this movement here. This was a trap, okay, to the upside for traders to buy. And then after that, the market, it's just my expectation on this one is that the market, let's just do a Fibonacci from this level to that level. So I'm still expecting US30 to come back to this candle. Okay, this candle here. Okay, let's just remove that. So I think that'll be all for tonight. That'll be all for tonight. Okay. Okay. Can you see the candle that I mark? The candle that I used to mark is this candle. So I'm expecting this market to come back to this candle before going further up. Okay, this kind of these levels. Okay, you can see the pattern. This is a pattern.